You think saving money is safe, but your bank account is quietly making you poorer. Your savings are shrinking. Keeping money in a traditional savings account feels safe, but inflation is quietly eating your purchasing power every single month. 0.01% APY is robbery. The average big bank savings account pays 0.01% APY. That's $1 a year on $10,000, while inflation runs at 3 to 4%. Inflation silently eats everything. When inflation is at 3.5% and your savings earn 0.01%, you're losing 3.49% of real buying power every year. No one sends you a bill. The bank profits off you. Your bank takes your deposits, lends them out at 7 to 20% interest rates, and hands you back a fraction of a percent. That spread is pure bank profit. High-yield accounts exist now. Online banks and credit unions are offering 4 to 5% APY right now. The exact same FDIC-insured protection, just way more money back in your pocket. The $10,000 real-life example. Your emergency fund is one of the best candidates for a high-yield account. It sits there doing nothing anyway, so make it earn while it waits. Emergency fund is costing you. Your emergency fund is one of the best candidates for a high-yield account. It sits there doing nothing anyway, so make it earn while it waits. FDIC still protects your money. High-yield savings accounts at FDIC-insured online banks are just as safe as your local branch. Your money is protected up to $250,000. Switching takes 10 minutes. Opening a high-yield savings account online takes about 10 minutes, requires no minimum deposit at most banks, and you can link it to your existing checking account. Most Americans never switch. Studies show most Americans have never changed their savings account, not because they're happy with the rate, but because switching just never felt urgent enough. What banks don't advertise. Big banks spend billions on TV ads, but they never mention their savings rates, because if you knew what you were actually earning, you'd leave tomorrow. Compound interest works both ways. Compound interest grows your money faster over time, but only if your interest rate is high enough to outpace what you're spending and what inflation takes. The 30-year cost calculation. If you keep $20,000 in a 0.01% savings account for 30 years instead of a 5% account, the difference in earnings is over $80,000. That's a car, a down payment, or years of retirement. Rate chasing isn't always smart. You don't need to constantly chase the absolute highest rate. Picking a solid 4 to 5% account and staying consistent beats moving money every few months for 0.1% more. Savings rate versus investment rate. A high-yield savings account is not an investment. It's a parking spot for cash you'll need in 1 to 3 years. For longer-term goals, investing in index funds beats any savings rate. Roth IRA beats savings rate. For long-term goals, a Roth IRA invested in index funds has historically returned 7 to 10% annually, far more than any savings account will ever offer. 401k match is free money. If your employer matches your 401k contributions and you're not maximizing that match, you're turning down free money. That's 50 to 100% instant return before any market gain. CD rates are quietly high. Certificates of deposit, CDs, are offering 4.5 to 5.5% right now. If you don't need the money for 12 to 24 months, a CD locks in a guaranteed rate better than any savings account. I-bonds are still relevant. Series I savings bonds from the US Treasury are inflation-adjusted bonds. When inflation spikes, your I-bond rate spikes with it, protecting your purchasing power directly. Money market accounts explained. Money market accounts are like savings accounts with slightly higher rates and check writing privileges. Great for short-term cash you need accessible but working harder. The psychological savings trap. Seeing a growing savings balance feels good, even if inflation is quietly shrinking what that money can actually buy. Comfort is the enemy of optimization. Automation removes temptation. Setting up an automatic transfer to a high-yield account on payday removes the decision entirely. You save before you can spend, and the rate works for you automatically. Multiple accounts bucket strategy. Top personal finance users separate their money into purpose-labeled buckets: emergency fund, vacation, car repair, home, each in its own high-yield account earning separately. The checking account trap. Most Americans keep way too much in checking. A simple rule is 1 to 2 months of expenses in checking, with everything else moved to a higher earning account. Best high-yield banks right now. Online first banks like Marcus by Goldman Sachs, Ally, SoFi, and UFB Direct have consistently offered 4 to 5% APY with no monthly fees and FDIC insurance included. Credit unions beat big banks. Credit unions are member-owned financial cooperatives. They often offer higher savings rates, lower loan rates, and fewer fees than national commercial banks. The monthly dollar drain. If you're earning 0.01% on $15,000 and a HYSA offers 4.75%, you're losing roughly $58 in missed interest every single month. That's $700 a year for doing nothing different. Taxes on interest matter too. Interest earned in savings accounts is taxable income. Keeping this in mind when comparing rates helps you calculate your actual after-tax return more accurately. Start with $500 today. You don't need thousands to start. Even $500 in a 5% HYSA starts building the habit, the account history, and the interest while you continue growing your balance. Your move starts right now. You now know the math, the accounts, and the exact steps. The only thing standing between you and earning 400 times more interest is opening a free account this week.
If you found this helpful, consider subscribing to stay updated with our latest videos.